All right, guys, welcome to day 21 already of Anomaly sequence. Today we're going to be talking a little bit more about technicals. We're going to go over a little bit more of the in-depth stuff that you may have seen me do on my executions or trade recaps and whatnot. Overall, this is going to be a standalone lesson. We haven't really continued off of anything. The last 2 days were TradeFlow competition trade recaps that I took, but overall now there's not really a lot happening, at least for me, in terms of opportunities. So we're going to go back to theory, showcase you guys 3 levels of pretty much what I call the market shift, right, and helping you understand what we're actually doing here. So these are all buy-side triggers. These are all things that you should be seeing on your M15 execution time frame, right? And from there, we're going to go in depth of what you actually need to look at, right? We talked a lot about the concept of running liquidity. We talked about what that means, right? When you run liquidity, how you can then look at, let's say, the little fraction of your body below running liquidity, right? And we're going to talk about just ideal scenarios that we have here. So the first very, very, very familiar mistake that many people make, which is kind of the loss that lots of people do, is doing just purely an M15, let's say, entry, purely going into M15, M5, but not realizing that you're trading against, let's say, some sort of higher time frame array or just against most recent arrays. So we are taking this a little bit more advanced. We're going into 3 different ways that you can take, let's say, shift, the market shift, the market structure shift, the oh so famous trigger that you see for E1. So why is this an E1? What does an E1 stand for? E1 stands for entry 1, entry type 1, whatever you want to call it, and it is the one that is in conjunction with a liquidity injection, right, or a run on liquidity. So it's either or, right? You've got these 2 being your kind of pendulum of what you're looking at actually when it comes to your E1, right? You are running opposing liquidity, or you're injecting new liquidity, which you can use as your confirmation. So that is done by one of 2 things, right? Run on liquidity entails that we're taking out opposing liquidity, often enough in the form of sell-side liquidity. In this case, for these buy side, it's these lows that can be there, right? This can also be, obviously, neglecting this little base here and just running liquidity like this, just running a previous daily low, previous session low, in this case, all being sell side on buy side examples. So it doesn't necessarily need to be, let's say, the low that we have here. It doesn't necessarily need to be these lows that we've created in the leg towards a major low, towards a major sell side liquidity point. So do understand that you can have just an arrow like this, right? And then your shift will obviously become higher, right? The reason why this is so nice is because it allows you to create that most recent high as your area of confirmation, which takes out the previous low and will then act as kind of that break of structure, that market shift, that market structure shift, whatever terminology you want to use, as that confirmation, right? Let's talk about the first mistake that many of you guys do. The first mistake that many people will kind of fail to realize is that they're on M5, and that's kind of the mistake that I've been making the last 2 to 3 weeks. You're on M5, you have this pattern occurring, but you've got a shift, but that shift is into an M15 imbalance, right? It is into an M15 imbalance. It is into a higher time frame. It's still ETF, so ETF. Let's make it like this: higher ETF array, right? And this can be one of 2 things, something like this, right? So you're trading into pretty much a higher time frame, a higher ETF array, which is either an imbalance. It could also be, a shift zone that is higher, right? It could also just be an order block that is resting here as well. Either way, what it comes down to is that this leg here, you're trading into something else, right? You're trading M5 bullish expansion into M15 bearish expansion. So your ETF needs to align fully. Many people will go into M5 way too quickly. And another way that you can check this out is by also just seeing your OTE, right? Lots and lots of times I see this mistake being made where traders will trade into an OTE of their opposing direction. So you have this high, you have this low, this bearish leg, right? You got your shift, but boom, it's actually just an OTE, and price continues to go lower, going towards something that is below there, right? So you got to understand price moves from arrays into other arrays, away from arrays, and then if there is an opposing array still left there, make sure that it has either been taken out or that it's far enough for you to act as some sort of area where you want to take profit, right? So if you're in a shift here, then you'd rather have this array being your pocket, right? And that's exactly that playbook that we talked about, right? We're taking lows out here, we're trading them into arrays, hopefully on higher time frame arrays, even on M15. You know, if your Asia session is like here, and we leave behind, let's say, Asia high, and we have an array above that, or even your partial higher up in that bearish leg, you want to be considering that as a partial point, rather as that being something that price can still react to, causing your entry to be void and making you hit an SL. Right, we're not going into heavy details such as divergences just yet and extending SLs. Not too worried about that just yet. But overall, this is kind of the first example that I see many people like failing to comprehend, which leads to unfortunate losses, which is just a bummer. Let's talk about a little bit more of an advanced example. So what can you do to pretty much understand that a lot better is you can wait for, so let's say it's an imbalance, right? You've got this bearish leg here. We run sell-side liquidity twice, and we run a major sell-side liquidity here as well. Majority of the time, people will have their shift here, right? And then you can do one of two things, right? We talked about how depending on how price is around that major level, right? If it closes, if there's a shallow close, so that means no body close, or if it's a deeper close with a candle close, then obviously you can wait for a retracement. But if it's a shallow close, you can't. Why? Because it means that sell-side pressure is trying to push price lower, 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 but buyers are buying price up aggressively, forcing price to close with a body candle close above that sell-side liquidity. If that's the case, then often enough people will go for shift entries. That is the logic to go for shift entries, right? If there's aggression, if there's intent and aggression. So there are two factors here. I'm giving you guys a little bit too many gems in my opinion, but on the low and in the leg as well that you're looking for. Imbalances, candle closes, just going with that anticipated direction. Then you take the shift entry, but again, that's where you're fucked in cases like this. You take the shift entry, boom, price knacks against you. Here, boom, price knacks against you. So what is a more advanced way that you can look at this? A more advanced way that you can look at this is going to be the let's say, inducement of the opposing array. That's this one. So in this case, you have a bearish imbalance. Price creates your execution pattern in that bearish imbalance. So what you're not going to do is you're not going to enter off of the shift here, right? You're not going to be doing something along these lines. Not ideal, right? You're also not going to, let's say, wait for the retracement here, because one, you've done one of two things, right? You're in this bearish imbalance, right? You're in the bearish imbalance. You've created relative equal highs, even though it is considered to be a shift, but it could still very much plummet lower. So what you wait is for that confirmation, right? You wait for that confirmation. In this case, it would be an inducement of the distal line of your imbalance, the one that's furthest away. Once that occurs, boom, you're technically playing an E2 in that case, right? For the guys that are familiar with E2, right? It is going to be some sort of confirmation, but that's only if they're arrays. So what you can do here is on body closes above any of that opposing array, you can actually enter, So candle closures. And this is where it gets really interesting. So I'm giving you guys tools that you can start looking at, observe them often enough, and then implement them yourself, right? That is my ideology of this. The next one is, so here with candle closes failing, you can also do that. So this is an imbalance. So this entails that it's going to be a candle close above opposing. So it's always going to be the distal line. Candle close above distal, right, of your imbalance. That's what you should be doing here, and then you can enter. Here, it's transactions above MT. Transaction above MT, and then what you want to see here is an array, right? Some sort of intent or an order block, right? It can be either or. This is your standard E1, right? You can see that often enough. Here, boom, you get the shift, but if you play the shift into that order block, right, what can happen is that price can still go lower. So you want MT transactions, you want there to be an array or an order block or a shift zone anywhere here, and then boom, you can enter. So I'm giving you pretty much all the criterias and situations of when you can take these, right? So here you need arrays. So it's observational, right? I'm giving you guys the tools that you need in order to not just blindly take these executions, because many of you guys will just look at this and be like, okay, hey, I can apply that here, I can apply that here, and I can be happy. But you'll realize, and if you don't realize exactly what you're looking for when, such as this area, this area, this area, in this case, not the shift, but the leg, this area, and then if we create arrays, boom, higher probability. So that's the big difference between, let's say, SMC ICT and liquidity concepts. We're looking at order flow. We're very, very onto price. We're very close to price in that case. We're looking at exactly what is happening where, what needs to occur where, and we're reading price a lot quicker. Yes, at the beginning it will be super tricky because you're gonna doubt and second guess everything. You're going to be like, okay, hey, what am I actually doing here? But as you get the gist of it, as you get more comfortable with it, you will become a lot more clairvoyant. You will become a lot more understanding of these liquidity injection plays. So all of these are exactly the same, right? Flip them, right? You get sell side. Not that difficult. Replace this with buy side liquidity, and it's exactly the same concept for shorts, right? This one is the biggest mistake that you guys make, which is trading into opposing arrays on the same ETF. So M5, M50. On your lowest time frame, you can't be trading against the order flow on your higher time frame on your ETF, whether that's M15. Don't know why I did a 3 there. M15 or M30. That's what I wanted to do. I still see a couple people on M30, and that's okay, right? And then ideally, this shouldn't really be rocket science. What elevates all of these E1s from like just execution patterns to really good setups is if you are trading from a higher time frame, from a flow array. And this is the hardest part, right? It's waiting for all of this. It's waiting for price to tap into H1, H4. It's waiting for any of this to occur. Whether that's an imbalance, order block, whatever, BPR from H1, H4. What makes this even better is if this is done in, let's say, a discounted area, right, from your dealing range. Super simple, really not that difficult. If all of this occurs, boom, into your discounted area. So that's that. Not rocket science. I hope you guys enjoyed, and I'll see you guys in the next one.